Let's see where things stand. Bitcoin, to Scarlet's point, touching $80,000 for the first time, going all the way back to May. And get this, just in the last roughly 10 days, since August 15th, it's up 26%. Look at that. You go back more than 26%, almost touching $80,000 as we speak. Here's why. Chatter around the debasement trade helping drive inflows as the U.S. Treasury steps up bond purchases. And last week, the OG crypto, we're talking about Bitcoin, of course, saw the strongest weekly inflows into U.S. spot ETF, Scarlet, in 10 months. And
I'm watching those flows, Tim, because the 13 U.S.-listed spot Bitcoin ETFs last week drew in a net $1.92 billion, led by BlackRock's IBIT. That total is the most since last October, when Bitcoin crashed from its record high and ushered in this crypto winter. The inflows, right over here, you can see, really represent a sharp rebound from the previous week when spot ETFs suffered almost $390 million of net outflows. Now, so far this year in 2026, Bitcoin ETFs have seen some $2.9 billion drained. Tim?
Well, as we mentioned, we're talking a lot about whether or not this crypto winter is over today, and finding the answers to that. Establishing a new trading range will require sustained demand. We're going to discuss this with Bloomberg's Isabelle Lee. Isabelle, it seems like the tone has just completely shifted in the last few days. You wrote about how we're seeing to the moon, we're seeing memes from Michael Saylor. Is the crypto winter over?
I think sentiment-wise, it may be. They'll get any reprieve they can get. You know how it is. If you see Bitcoin rally, Twitter or X lights up, you forgot to say hodl, hold on to dear life, but all the memes possible.
Shout out to 2020, 2021, right?
Yes, absolutely. The trigger of this is really the bond buying of Treasury Scott Bessent. I mean, that pulled yields lower, weakened the dollar, strengthened the gold, and it revived debasement trade. And what is debasement trade? It's the premise that, oh, maybe the fiat currencies will decrease in value, and that's why there will be value in scarce assets. And Bitcoin has 21 million shares, and that's why people were like, woohoo, maybe this is our time to shine.
Another source of support, I suppose, for spot Bitcoin ETFs in particular, and the net inflows that they've seen over the last week, is a theory that Eric Balchunas has written about, which is that a lot of people lost money through a hack into their cold wallets, and some $100 million, or at least $100 million of spot Bitcoin was stolen. So that's led to a change in behavior where people are like, I'd rather hold Bitcoin through ETFs than the actual currency digital coin themselves.
Yes, that did definitely strengthen the case for ETFs, because if you're not really committed to self-custody, and if you're not really all in about like, I want to hold the Bitcoin myself, why not just give it to a trusted Wall Street asset manager like BlackRock, like Fidelity, all those prominent people who have market makers and custodians that are very white.
Because that goes against the entire thesis of having this stuff yourself.
But you're talking about Bitcoin.
Get rid of the intermediary here, right?
But you're talking about Bitcoin purists. Some people hold Bitcoin for fun, as a diversifier, as just out of a curiosity. So maybe that's why they prefer ETFs.
And the investor base has widened as well from the original
from retail
purists
to institutional, and we've seen huge inflows into Bitcoin ETFs. I think we saw the highest last week in like several years. And Monday, we saw inflows of like $400 million spread across 13 spot Bitcoin ETFs.